presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. If you listen to that intro, the man on the phone was correct. That is our Discord trading room application. If you want to check it out, I strongly recommend doing so, right? You go over to TFNN.com, okay? And just go over to the services tab, right? And you're gonna see it right there, the Tiger's Den trading room. We got a bunch of people in here, but somehow it maintains itself as orderly, which I always find very impressive. That just shows you the caliber of our Tigers here, and Tigresses, of course. I love it. I mean, it is like a really good way, like I can just take a look if I'm doing something else for the company that has nothing to do with like looking at the market or whatever it might be. I can just kind of take a glance and see what's going on. We have our hosts in there. Basil posts all the time. It is fantastic, especially at very interesting kind of junctures in the market like we have today. So yeah, it's $1 a year. The only reason that we charge that is just so we know who's in it. We also have, I know a lot of people don't know this, but we have I believe it's a frequently asked questions tab in the Tiger's Den trading room on Discord. That just tells you how to operate this whole thing, right? So pretty straightforward, pretty easy. Like if I can show you here, I don't know if it works like this. Yeah, can you see this? Yeah, perfect, right? The welcome tab, that's what it is. Frequently asked questions, that's what we got going on. So anyways, I really recommend checking that out. It is cool. I hope you all are having a great day. Interesting stuff in the market. We're gonna talk about Doyu in a little bit. But let's take a look at what we got going on in the indices. So I did go short the SPX yesterday before the end of programming. Like, it didn't really do much, right? You've really had a sideways moving market. I mean, it did okay kind of like halfway throughout the day, but then kind of picked back up. And I don't know. I think a lot of it's probably going to be dependent on, we have TSM earnings coming out, but it's hard to say, right? I mean, if it's very strong, you can still get kind of tracebacks in the market because it's just demonstrating strong growth in a market that's trying to kind of maintain that a little bit, right? Of course, you're having some of the yields come down as well, which is nice. You had some comments from some of the Fed chairs, some of the Fed members. I can get those up for you. Yeah, Waller basically said, let's see here. So as long as the data comes in good on inflation or continues on that path, then I can certainly see rate cuts happening sooner than maybe the markets are pricing in. Crazy comment, but comment nonetheless by Waller. So crazy. Because you had some fixed income guys from Nat Alliance being like, this is a game changer. It's like, good Lord. I mean, that's definitely forward statements. I mean, we can take a look at the TMF right now. Let's look at the TLT actually, not the leveraged. You have a lot of guys gearing up wanting to buy the TLT, which is interesting. Again, I'm not really a big bond guy, but you should definitely know kind of how they affect the market in general. So yeah, I mean, you're seeing a massive gap up yesterday, right, with some decrease in the yields. And then even today, of course, is the 20 years, but still. So let's take a look right now. You have the SPY essentially off 0.08%, trading at 593. Of course, take a look at the SPX to really be accurate there. 5,953, up about 0.06%. You have the composite off about 0.25% at 19,462. You have the Dow Jones Industrial off about 0.05% at 43,199. And then the Russell, I mean, really, it is impressive that the Russell has been doing so well, comparatively speaking, right? You have the dollar actually retreating from that 109 area, still right under it, but around 108.98 in the dollar. Crude retreating just a little bit as well, trading at 77.76, off about 1.21%. Gold contract still moving to the upside today, up 1.07%. We are going to have Tim Ord on in the second and third segment. I'm just always looking forward to hearing what he has to say about gold. Again, I'm not really a big metals guy in any capacity, but you can definitely see, or at least you could have recently. You know, you're getting money leaving the equity market, you're getting money leaving the bond market, right? I mean, do we have another place to kind of rotate into? And of course, we spoke about yesterday China buying a large sum of gold in December and continuing to ramp up purchasing as well. You have copper trading up 1.06% at $4.43, and then silver up 0.22% at 31.60. What else we got rocking right now? Celsius up 2.56%. You have Lucid trading up 3.13%. Tesla's actually down off 3.05%. Fubo continuing its move to the upside. Speaking of Lucid, I want to take a look at Rivian real quick. Up 4.7%. So, you have this article from NBC, okay, and it said EV hybrid sales reached a record 20% of U.S. vehicle sales in 2024, and you're getting some movement up in some of these EV companies based on that. Now, in my opinion, I actually think this can be a little bit bearish given the whole situation. Namely that I think EVs were a lot cheaper to get into because of tax credits, etc., and the promise of building out larger infrastructure and so on. I don't know if that remains the case under Trump. I mean, some of the conversations, maybe Tesla gets some access to that, some kind of credit if you buy a Tesla, but it's not a blanket EV thing. Now, one of the bullish kind of positions you could take, or bullish arguments rather, for Rivian and Lucid is that Chinese and Russian EVs are totally banned. Now, I don't really see a lot of Chinese EVs in America regardless, but that could, at least in the general mind of buyers, kind of cause a catalyst almost, right? So kind of interesting movement on it. Still don't like Rivian. Lucid, I don't have an opinion on. It just really fluctuates within a pretty predictable level for quite a while, which is nice. You can probably play some angles on that. Let's take a look right now. I want to go over, create like I have this watch list, right? And I just put this together. This is from my personal portfolio. Not that I necessarily own these, but I want to talk about them. This is what I'm like looking at really going forward for this year. And these are like, minus CTM and maybe SPCB to a certain extent are pretty solid companies, I believe, right? You're seeing Nebius up 1.42%. Castellum's obviously moving up 15%. This is interesting. I was talking about this stock very low, blew up, right? Went up to 283, comes crashing down with the general kind of market sell-off and really the slaughtering of all these micro caps. And we've got some movement to the upside today. I mean, some of the news, the past two sessions, some of the news with Castellum is they secured, you could see maybe at the bottom of my screen here, $3.2 million Naval Air Warfare Center Aircraft Division contract. Okay, they're trading at about 65 million market cap. Maybe not horrible in the capacity. You have negative PE rocking here. And so I think right now you're seeing some level of staying power, or maybe, I would say staying power at kind of these levels, right? You make a bottom at that gap, right? And then we keep coming up on it. Some decent volume, at least trying to get high there, but then also selling. We'll talk a little bit about Castellum in the fourth segment. We're gonna have Tim Ord on next. Stay right there.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. We're still going to get Tim Ord on the line. Let's take a look before we go any further at Castellum. So you're up 15.5%. Okay, you're getting some play right now on this, right? Of course, they got a good contract. What we were talking about when we first started covering Castellum is they had a change of leadership in the CEO position, and his whole comment was like, listen, I know we have been burning capital forever, and we're not doing anything, and we haven't been forever. He's like, I'm going to change this. We're going to reduce some of our costs, and we're going to continue to acquire companies, and we're going to continue to acquire contracts. That is my sole focus as CEO, and he's done okay so far. They've reduced costs, right, like operating expense. I think they've received 2 contracts in the recent past, hence this movement to the upside, which is phenomenal. I mean, they're not massive, you know. They're definitely not massive in any capacity. I mean, like 3.2 million there. I think the other one was like 2 million or something like this. And of course, they diluted the stock pretty heavily with that run up. Regardless, I think it's important to kind of look at and see like what Castellum does. Give me 1 second just to turn off my notification here. Okay, so let's take a look, because the question is, I should tell, cybersecurity company. If you're not familiar, you haven't heard when I was speaking about this in the past, they are a cybersecurity company. Now, what's unique about them is there's 2 things I think that are unique that might be positive to some extent, but in the short term could be difficult, right? So first thing with Castellum is that they are basically staffed entirely by military veterans, mainly naval intelligence. This is unique, right? But the reason why I think that is a positive for them is that they are just gunning for federal contracts and state contracts as well. So that's kind of interesting. That does, of course, pose some kind of situation in the long term. However, I do believe that the Trump administration will be very bullish on revamping IT. I mean, you think about this, right? He's always, the peace through strength. You can only be that way if you have a competent kind of cyber infrastructure, which we as America don't really on the whole. Our specialized teams are probably par none, but the entire infrastructure itself could really use some, how can I say, like normalizing, I would say, and definitely some modernizing. So that's interesting. But what I find unique about Castellum, because I was trying to look for, like, what do these guys do? Like, how do they actually perform and what are they selling? And I'm thinking, how funny would this be if what this company does is just have access to a bunch of capital and they just buy out other cybersecurity companies? That is precisely what they do. Okay, so they say this is in their 10Q, last one for September 30th. This is focused on acquiring growing technology companies in the areas of information technology, electronic warfare, information warfare, and cybersecurity with businesses and governmental and commercial markets. Services include intelligence analysis, software development, software engineering, etc. So they've purchased, it looks like about 6 companies. Corvus Consulting, I think, is the largest one that they're really leveraging. You have Main Nerve Federal Services, Marison Tech. You can look all these up if you would like to. This is kind of weird for me on Castellum. I don't know if you feel the same about it, but it makes me feel like the people who are really in charge, even if I think they are maybe competent people in their field, and I definitely think the CEO is a competent guy, and I've been reading up on him and reading what he talks about and kind of how he talks about it, and he's definitely all there, you know? But it seems like you're getting more to a point where Castellum is actually like a management firm of a lot of these smaller companies. They're trying to find small companies that are maybe just starting out, buying them and leveraging those to gather more contracts. That is not necessarily the same thing as like a SentinelOne or a CrowdStrike, even though those companies might do acquisitions, right, to incorporate, you know, I mean, you could think of Cisco when they bought, oh man, what was that one company that they bought? I can't remember, but it was like a SIEM analysis company. And that was beneficial for Cisco, right? They added it to their lineup. But Castellum isn't that. It just seems like it's a group of guys who want to get access to these beefy contracts, and so they have a bunch of money and a bunch of funding, and they're going to buy these companies to see if they can leverage and get those. So there's a lot to think about there that's maybe non-traditional, maybe a little bit asymmetric with it. And so, anyways, that's what Castellum's doing now. You're moving up. You know, what I will say is the contracts don't lie, right? I mean, their guys at the top are obviously integrated in with the U.S. military. A lot of them have retired from it, so, you know, like 22, 23 years. Anyways, that's kind of what I'm looking at with Castellum. This is not a solid buy for me yet, especially right now. I mean, I could definitely see this kind of coming down. You're getting a second day kind of reverberation from that $3.2 million contract. And of course, you know, we're at 64 million market cap. So anyways, kind of interesting to say the least. Give me one moment here, guys. Okay, we're still going to try to get Tim on the line here. Let's look at what else I'm taking a look at, which is Aris. Super fascinating, okay? So these guys do water solutions, but it's for basically oil extraction from the Permian Basin, which is very unique. And they're kind of just starting on this, it seems like, right? So especially the expansion of the Permian Basin, I think, is massive. They have a huge portion of their company controlled by ConocoPhillips, which of course is kind of a great kind of insert into there. But let's take a look at it, right? You have cash roughly about, here, I'm going to pull this over. You have cash roughly about 32 million, not too bad. They do have some debt, right? And the debt is pretty significant, especially compared to cash. Now, total assets, total liabilities, not a big deal. And maybe you would kind of expect a company like this to be structured this way on its balance sheet. But you have long-term debt of about 452 million. Pretty intense, I would say. But of course, as you can see from total assets, you're about 1.4 billion versus 677 million. So not too bad in any capacity. You have decent revenue, definitely increasing from the year prior. Of course, if you wanted to and go a little bit deeper into it, you can pull up the other 10 Qs as well, which I might do if I decide I want to further cover this kind of stock. But it seems interesting. And so, yeah, if we get down to like kind of what they do, of course, they say environmentally focused, whatever that means as far as natural gas and oil extractors are concerned. So they build long-term, basically do development, construction, and operation of integrated produced water handling and recycling infrastructure. Okay. That provides high-capacity, comprehensive produced water management, recycling, and supply solutions for operators in the Permian Basin. Okay, and you're thinking about this, right? You're just kind of getting opened up in the Permian Basin with what Biden did maybe about, like, what, 2-3 years ago. And then, of course, Trump is always with the drill, baby, drill. Now, how much more are we actually going to be able to drill that it's viable for producers to do? You know, that's I think that's up for debate a little bit, but no doubt there will be a heavy emphasis on kind of expanding drilling in the Permian Basin, I would say, from the Trump administration. And I mean, you know, you're looking at 897 million market cap. Of course, you've gotten some fantastic movement to the upside, but I need to do some more research to see who else is competing with them in a meaningful way. But it seems like, you know, you're having a bunch of other companies coming in that are trying to drill, who are kind of outsourcing this production, outsourcing this kind of like water treatment, management, everything to Aris solely. Which is very fascinating. So folks, stay right there, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Of course, we were just taking a look at Aris Water Solutions before we went to the break. Worth doing your own due diligence on. We got the SPY right now off about 0.03%, trading at 592.65. You get the composite off about 0.46% at 19,422. You get the Dow Jones Industrial off about 0.1%. 43,181. How about that? Dollar at 108.94. You got crude oil trading at 77.94. And then, of course, our guy gold right here up at 1.10% at 2,747. Let's go over right now. Let's switch screens. We're going to go to this URL. We have the ord-oracle.com every Tuesday and Thursday. Tim Ord of the Ord Oracle comes on the Tom O'Brien Show. We enjoy his analysis. Of course, I really recommend checking out his website. You can get his newsletter there, a book. Of course, he shows you past results as well. Additionally, you can go over to TFNN.com. You can go to the services tab, and we have 2 fantastic webinars from Tim Ord. Of course, we need that to load. It is the secret science of market tops and the 6 secret ratios every trader should know. Tim, how are you doing? The SPY, huh? Not a lot of move today. Of course, you get a gap up yesterday. Didn't have a lot of volume until right at the end of the day where it really picked up. And today it seems like we have some lighter volume as well. Kind of trying to figure out where it wants to go right now.
Yeah, actually, kind of changed my mind what may happen over here in the next couple of weeks. But anyhow, let's go back to look at the bigger picture. We showed this chart on Tuesday. I updated today's trading. This is the main focus on the bigger trend. Anyhow, the bottom window is the 21-day average of the trend. Next window up is the 63-day average of the trend. So the 21 days is basically a month average, or a month worth of data to come up with that reading. And the 63 days is actually 3 months of data. But anyhow, both of them are right at, or actually the 63 days actually in bearish territory. Anything below 1 on a 63-day average, I got it in pink across the chart there. The chart goes back to mid-2017. And a lot of times it comes at tops. So on the bigger time frames, there can be bounces in a downtrend. Right. And I think we're probably are going to start a bounce. I'll talk about that a little bit later. But the bigger trend right now is basically bearish. I think this year is probably going to at best be sideways and probably could be down. But anyhow, so I'm kind of, I don't know, being careful here. I'm not letting long trades ride for now because of this chart. So let's flip to chart 2.
Sure.
That's the bigger trend. Chart 2 is actually a smaller trend. The bottom one is the 3-day average of the trend. The next window up is a 5-day average. The next window up is a 10-day average. And they're starting to improve from Tuesday. If you look at 3 days, preferably you like to see all 3 of those moving average of the trend in 1.2 or higher.
Okay.
A lot of times those are bullish. That's pretty much leads bullish markets. And all the pink areas times when all 3 of those moving average were in bullish territory. And we haven't been in bullish territory since September. But in December, we had 2 of those moving averages get in bullish territory, but never the 10-day average. But over the last couple of days here, these moving averages, the 3 and the 5, and eventually the 10 are going to start moving up here. So I'm thinking the market is going to go into a trading range. I don't think the current rally is going to last. I think it's probably going to find a peak here pretty quick.
Sure.
But what I'm starting to see is panic entering into the market, not to a degree where you should be long here, but I think that setup's going to come. Mm-hmm. So let's flip to chart 3.
Sure.
Here's my analysis. We did trade once in January here, and I did get kind of if we were talking on Tuesday, I thought, yeah, we're probably at support, but I don't have a strong enough signal to really get long here. Okay. You know, the market did bounce, but I didn't take the signal. But I think it may get back up to the gap up around that 600 area, which is that tan area, which is right above us. I think it may push there. I'm not for sure. I'm not too worried about if it doesn't or not. But I bet we fall back down to the big gap we had yesterday. the market gapped up yesterday, left a big gap. And that's gaps right inside of a bigger trading range. It kind of marks the midpoint of that big trade range. At some point, that gap's going to get filled. And I think we may push up a little bit higher first, possibly. This is expiration week, which normally leans bullish. Mm-hmm. I think we may push to the 600, then fall back down to around where that gap, where the bigger gap is, well, yesterday's gap is, which is around 583.
I see.
And I noticed the trend starting to go up here. If you notice today, even the market's kind of unchanged.
Yes.
The trend was higher. We're around 1.1 right now. And I think it's probably a little wave 4. If you do Elliott wave, this could be a wave 4, then wave 5 finishes off tomorrow or something. I'm not sure that's going to happen. I'm not going to bet on it. But what I probably am going to bet on is a pullback into that 583 area. And if it does, I think the trend, since previous times, that trend into that region did get it around 1.2 or higher in that vicinity. If you notice, I labeled in blue, actually in blue lettering, the trend closes, and I marked in a blue box there where all those trend closes were. So if we get back in that trend area again, which is noted with that blue area, mm-hmm. Previous times it's got panic in that area, chances are it'll do it again. So I think we'll fall back, and the trend's going to get into the at least 1.2, if not higher, and probably push the 3, the 5, and the 10-day trend up into bullish territory. I bet somewhere around that 583 area. And if we do, then I think we'll actually go back up and at least test the highs, but not break the new highs. Now we think, well, that's a contradiction of the 63-day trend being bearish territory. Not really. This is just a short-term trend. I don't think it's going to last. But it could be a decent trade to the upside, because if we get to, if I get a signal around 583 and we break the new highs, which I think we will, it could be a 4 or 5% trade to the upside, and that's worth taking. You know, so I'm thinking if that's going to materialize, not sure it will, but I'm thinking it will, and I think we'll probably see some sort of a high in February, because I think this trade will take another week to gel up. Sure. I don't think it has enough power now to keep going, other than maybe hit 600. So from there, I bet we fall back down.
Right. And
I bet the trend starts getting back up to that on the fall back down part. The trend will start getting back to 1.2 or higher, and that will trigger the next buy signal. So I hear the music.
Yeah,
so.
Tim, please stay right there, folks. We'll be right back with Tim Ord right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting, designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Tim Ord of the Ord Oracle. Again, strongly recommend checking out his website at ord-oracle.com. Before we went to the break, we're taking a look at the SPY chart. Obviously, not a lot of movement going on today, but Tim, you were basically saying that the trend was climbing a little bit today as well.
It's not topping here. I'll put it that way. Right. I think we're making some sort of a base, and in the like of this chart number 3, I got those trend readings, which is I put it in a blue box here in that vicinity. So once you trend readings start to develop in an area, that area becomes support. And so what we just need, though, we need ideally the 10-day trend to get up around 1.2, and that's probably what we're going to eventually get here over the next week or so. I think we're going to try to rally, and it's going to fall back one more time, and that next time is probably going to be the trade that's going to be worthwhile, and we're going to try to break out to the upside. So on a short-term basis, I don't think this is an intermediate-term rally to the upside. I think the market still, the whole thing's topping here. But 583 on the SPY, I think it's in that vicinity is going to be the trade setup. Mm-hmm. So that could develop late next week. I don't think they'll do it next Tuesday, but we'll see. We'll trade as we go forward here, but right now, if I had that trade on that we talked about Tuesday, I was kind of leaning that way.
Yes.
I would probably, take that trade and run with it, or not run with it. I think it's close enough, make 2%. I'd sell out because I think we're going to come back down, fill that gap we did have on yesterday. So anyhow, we'll see how that develops. Next week, I'll have more information if my theory, which is that blue arrows I got on this chart, if that works out or not. So, but if it doesn't, some other scenario may develop, and I'll present that. But the scenario, what I got right now is, I think we may push a little bit higher and fall back down into a low sometime next week. Then that's the trade that's going to be a worthwhile trade to the upside. So anyhow, I'm staying neutral for right now, though, not chasing the market. So let's go to chart 3, 4.
Absolutely. I'm pulling up 4 right now. Got the GDX rocking. Okay, good.
Yeah, anyhow, it's top Windows GDX, and actually I want to make a note that I thought that was head and shoulders bottom, and I thought the support comes in around the neckline, which is 34, and if you look at where the market bottom over the last couple of weeks here was actually 34, so that neckline did find support. Bigger trends up. This is a monthly chart of the up-down volume, which is the bottom window. That's the cumulative up-down volume. Next window higher is the cumulative advanced decline. Gave a buy signal back in, I think it was May, and still on a buy signal. To get a buy signal, you need a jump above the mid-Bollinger Band, and And so I think this is just a pullback in an uptrend. And we pulled back to the neckline, found support, and the monthly charts remain on a buy signal. Chart number 5, I presented this on Monday, or Tuesday rather. This chart gave a buy signal when the RSI falls below. Actually, I can tell you what the chart is. The second window down from the bottom is the bullish percent index for the gold miners index / GDX. So it's another ratio. And I use an RSI on that ratio, which is the top window. And when it gets below 25, it's in a buy area. And this chart goes back to 2006. And the blue lines show all the successful buy signals. Well, there's one failure back in 2013. All the rest were decent buy signals. So anyhow, we got an RSI below 25. Currently, we're at 2291. Even though the market's pulled up a little bit, the bullish percent index / GDX hasn't started rallying yet, but it will. So we're probably at another start of an impulse wave to the upside.
Okay.
My view. How long? I'm sorry. Go ahead.
No. I was just affirmation right there. So.
Oh, okay. All right. So anyhow, it looks good. Nothing, can the market mill around for a little bit? Yeah, but in general, this market's going to work higher. Chart 6, which is this kind of looks at the real big trend. This chart goes back to 2009, and the bottom window is the GDX GLD ratio, and this ratio has been hovering around 0.145. We're at 0.148 right now, but the 0.145 seems to be an important area because previous intermediate term, if not longer term lows, is formed when that was hit. And we hit that here basically in late December, early January. It has since turned up a little bit, but all those were impulse waves to the upside. So the GDX ratio kind of is a relationship between gold stocks and gold. So the cheaper that ratio is, the more cheaper gold stocks is compared to gold.
Right.
And so this is kind of a value situation. So the gold stocks compared to gold are relatively cheap here. So that's another kind of value. Can this thing start screaming to the upside at some point? Well, so far it hasn't, and maybe it won't, but it should at least get back to the previous highs, which is up around 0.2, somewhere in that vicinity at a minimum. So don't know when that'll happen, but it probably eventually will happen. And maybe we'll get a rally back into the 2010 high of 0.4. Don't know. But anyhow, we're at the cheap area of the gold stocks right now. So let's look at the very short term. Showed this chart on Tuesday, and it's just a short-term momentum chart. It's designed to kind of catch the trend. It doesn't try to catch the wiggle. It does try to catch the big wiggles to the downside, but not the small wiggles because it won't do much. Well, anyhow, the blue areas are times when both indicators, which the bottom indicator is the 18-day average of the up-down volume, and next window higher is the 18-day average of advanced decline. When both those indicators are above -10, the market's in an uptrend. When it's below -10, the market's considered in a downtrend. And over the since March, it's basically the market's pretty much been in an uptrend, except for November and part of late December, early January. But now, since it is back up above -10, suggesting an impulse wave begins here. And this market, these two type of indicators are usually not real. They don't flip above -10, below -10 a lot. It can get a little whippy, but most of the time it stays in one direction. Either stays below -10 for a while or it stays above -10 for a while. And so I'm thinking this is going to stay above -10 for a while. And we did expand from last Tuesday. I think they were around +3. Now we're around +12 here or better. So this is starting to trend. It's not designed to catch the bottom, but it does help to confirm the buy signals I got over the last couple of weeks. For now, we're starting to trend to the upside. So gold market for the gold stocks are now bullish.
Fantastic. Tim, thank you so much for joining us. We'll see you Tuesday, all right?
All right, see you then. Thank you.
Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I was just joined by Tim Ord of the Ord Oracle. Strongly recommend checking out our YouTube channel at the end of programming today. We're going to have that clip up for you. If you decide to do that, please consider giving the video a like and subscribing to our channel, as it helps us out immensely with visibility online. And if you're watching on YouTube, please consider liking the stream. Again, helps us out immensely. It's funny what Tim was saying. Not funny. I mean, it was good analysis, right? And he's been covering really the miners for quite a while. And they've really been embattled quite recently. A lot of overselling and stuff. I'm just looking at, not because I like London Mining Corp in any capacity, but it just was brought up. And I say this pretty often. Whenever you have these like very large analysts setting price targets, like, from H.C. Wainwright or J.P. Morgan, like, you never know why they're suggesting that, right? They could have obviously a huge position in it that they want to sell into you with. You always have to do your DD, but one of the things that I think that comments like that from those larger guys does is it gives visibility to certain sectors that might be unloved in that time, right? And so you did just have a couple guys at JP Morgan start saying to look at some of these more embattled mining equities. Again, you don't know why they're saying that. You don't even know if they have a position, whatever it might be. Of course, they probably do if they're pumping the thing. But just keep in mind, it's why they might be saying something like that. But it is good that the visibility is there, right? Of course, China buying all of this gold is certainly interesting. It seems like they're going to continue to buy more. Maybe they use it for a stimulus. Who knows? But you can definitely get some movement up. I really do think that after Trump is in for maybe like 2 months or something like that, and his real approach becomes more apparent, that you can start seeing miners like that kind of pop up. But folks, thank you so much for joining me. Tomorrow, we got a lot more to talk about. I want to talk about Broadcom, DCO, SPCB, Resolve AI. We're going to talk about BBAI. Oh my gosh. So much to talk about, folks. Thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. for Tommy O'Brien in the morning market kickoff. Take care.